Hi, everyone, and welcome to a very special edition of Sister Strong, a podcast and video series all about possible. Today, we are at Camp Connections North, sponsored by New York Life, and we're having community, which is so wonderful right now to look at the faces of so many smiling camp sisters. We're about to record our program, so enjoy the show from the team from New York Life. Take it away. Who's going to be first up?
Renee, why don't you go first?
Okay. Hi, I am Renee Begger, and I'm with New York Life, and I am just going to share some market updates with you about what we see happening out there. So our bull market in the S&P that officially began in March of 2009 lasted over 131 months and was just 1 month short of 11 years. During that time, the market gained 18.3% per year and set 255 all-time high closings. It was the longest of our bull runs since World War II and produced the second largest overall gains. When the market fell in February, it fell by 26.7%. Which puts us in a bear market. In order to move us into a bear market, it has to fall at least 20%. So it did indeed achieve that. In the last 75 years, since 1945, the stock market has had 12 declines of at least 25 or at least 20%. And it happens approximately every 6.25 years. In all prior of the 11 bear markets that suffered at least a 20% decline, the stock market recovered 100% of the loss sustained, going above the previous bull market high. So that's good news. The average time the stock market took to recover back to a new closing high price point was 24 months. So that's a little bit of a market update for you. I have a little bit of facts here about the coronavirus. So in 2008, during the global financial crisis, 22 million workers worldwide lost their jobs. They are projecting that due to the coronavirus, it could be as few as 5.3 million, and that's assuming that we have swift and coordinated actions to contain the virus, but it could be up as many as 25 million. One thing that I did want to share with you on a positive note is, and you guys can give feedback on this too, but what I've seen as a result of this and our social distancing is I watch outside and I've seen families together taking walks, people out riding their bikes. In grocery stores, people seem to be more apt to strike up a conversation, say please, thank you, excuse me. I've also seen on social media people posting to shop for the elderly, offering to do services like that, or, if someone's in need of something. So I guess, maybe if something positive is going to come out of this, it will be that we come together as a community and, as family units, and we may appreciate things that we took advantage of prior to the coronavirus happening.
Thanks, Renee.
Yeah.
Okay, who's up next?
You want to go next, Darcy?
Sure. So we had a great call yesterday with Tony Malloy. He's one of our experts in New York City who's kind of guiding us through this market correction. And we all know that the Federal Reserve lowest interest rates last week, which is really going to free up more available credit for businesses to borrow. The Dow had its single best day since 1933 on Tuesday, was 11% up in one day, and we had market gains as well on Wednesday. So they're expecting like a 10 to 20% contraction in the market in the second quarter this year. And while that's not the lowest contraction that we've had, it's certainly been it's been greater than it happened in 2008, and it just happened much more quickly. So the reason for that is primarily so many American businesses have shut down. Right now, 4 in 1 Americans are at home. So domestic stocks or equities were down 30% since their peak in February, which is not the worst correction that we've had, but it's certainly been, again, one of the most rapid. We've also had the 2 worst days in history in the last couple of weeks. And we all just know that, you know, the one thing the market likes is predictability. And so major volatility is unsettling for everybody. And they really don't expect the markets to rally and can experience a consistent correction until the virus is kind of settled and burned out. One thing that you'll notice is that while the Treasury rate is at 0, that's providing extra credit, especially for large and small businesses, and it also allows banks to loan more money. So with the stimulus package that was passed, I don't know if it's done yet, but it's almost done. Yesterday, it was $2 trillion. In 2008, the stimulus package was $800 billion. So this is a much, much larger package, which is going to help not only large and small businesses, it's also going to roll out money for a large number of Americans that are under a certain income level. It's also rolling out additional money to banks to be able to lend. And it's also giving $150 billion in aid to hospitals and healthcare workers. So it's really a major step and happening fairly quickly to help things turn around and give people additional income and resources to get through this. One thing that we've noticed is that blue chip stocks, so you know your big blue chip companies, their value has actually gone up. But what normally happens in this kind of environment, we see a stronger bond market. Well, A-rated, so really great bonds that were trading, you know, very high 2 weeks ago. In the last couple of weeks, they're more valued like a double B bond. And the reason for that is banks and insurance companies are entities that buy a lot of bonds. Well, banks were selling many, many bonds in the last 2 weeks to increase their cash flow and their reserves. That's always an issue when we have something like this happen because banks have to have a certain dollar amount or a certain percentage in liquid assets in order to maintain their FDIC insurance. So that's why we're seeing that. They expect that to level out here, but it's really a great opportunity right now to be purchasing bonds, especially municipal bonds. And then just as I mentioned, they're really not expecting market kind of consistency until the virus goes away. We continue to see ups and downs every day as, you know, we have gains for a couple of days. You may see people take advantage of those gains and go ahead and sell off. So the biggest thing is, I think we've talked a lot in the past, it's really important to have a plan and to stick with your plan. My clients that I've met with in the last 4 years, when we put together the plan and I'm reaching out to them, they're like, no, you know, I'm not needing my money for 5, 6, whatever the year amount is yet. So there's really no need for them to be freaking out about this. The people who do not have any of their assets in any kind of guaranteed type portfolios, though, especially those that are close already in retirement, they definitely have more concern about what's going on right now. So with that, I'm going to hand it over to Lynette. And Lynette, can you just share some options that we've got to help people feel more secure in uncertain times?
Absolutely. Thanks. That was great information, Darcy. So, you know, like Darcy said, the volatility is going to continue, you know, hopefully not to the extent that it has in the past, but we just don't know. We don't have that crystal ball to be able to know what things are going to do. And so wouldn't it be nice to have some guarantees and some assurities that, you know, no matter what happens, that when you needed your money down the road, that you would know that it would be there for you. So we've spoken in the past before about being able to provide a safety net for your investments while they're accumulating, and to make sure that what you have put into your accounts is going to be there when you need it down the road. So I have a little video that I'm gonna share my screen. I'm gonna try to share my screen and show you this video, but it just kind of gives you an idea of how you can put some guardrails on your investment to make sure that when you need it down the road, it's going to be there for you. So bear with me, and let me make sure that I'm going to be able to share. Can I share without being the host?
Yes.
Yeah.
The green button in the middle. Share screen and the green button in the middle.
Green button. Okay, there we go. Okay, here we are. I'll try to make this bigger. Can you guys see that?
No, you got to hit the green button in the middle. Share screen.
Oh, I thought I did. Hold on. There we go.
You got it.
Okay.
Think of a long suspension bridge. As you drive across, what's on either side? Guardrails. You don't need those guardrails to cross the bridge, but how would you feel if they weren't there? Likewise, saving for retirement spans many years, and a lot can happen to make the ride feel uneasy. Market volatility creates bumps on the road, and it hasn't been long since the Great Recession sent nest eggs tumbling. Adding investment protection guarantees to your retirement portfolio may help you feel more confident as you continue to pursue growth opportunities. Investment protection guarantees, like those provided by an optional accumulation benefit rider available for purchase on certain New York Life variable annuities, can be thought of as guardrails for your retirement, allowing you to seek growth without the fear of loss. They help give you the courage to invest and stay the course, while you take on the road ahead. Ask your financial professional for more information about adding investment protection guarantees to your retirement.
Okay, so just a little bit of a blurb on how that could possibly be something that can help to ease some of those fears when it comes to what is my account doing. Is it going to go up? Is it going to go down? And just knowing that when you need your money in the future, that it's going to be there. And another thing that we have that can help when you are investing is something called dollar cost averaging. So with an account, like let's say you've got a 401k that you want to roll over. You've left a job and you've got a 401k, and you're going to roll that over into an IRA. When you open up that IRA and you deposit your money in it from your 401k, if we utilize something called dollar cost averaging, what that lets you do is kind of tiptoe into the market. It's going to take your lump sum of money and deposit it into an account that's going to earn the guaranteed interest rate over a 6-month period. And then at the end of the first month, we'll take 1/6 of your account balance out of that interest-bearing account and deposit it into the portfolio of mutual funds that we've chosen for you, that are appropriate for your time horizon, your investment philosophy, and your risk tolerance. And then at the end of the second month, we'll take another 6 of your balance and put it in there. So at the end of 6 months, we've taken all of your rollover funds and deposited them incrementally into your account, which does 2 things. Number one, it gives you the ability to kind of tiptoe into the market. So if there is still some of that volatility, not 100% of your account is subject to that in the very beginning. And then by doing it this way, on times when the market is up, you're purchasing less shares, and the time when the market is down, you're purchasing more shares. So over time, it gives you the ability to purchase more shares at a lower price. Hopefully that makes sense. So those are 2 things that we offer that help to kind of give you a little bit of peace of mind with your investments to keep them growing and to give you some guarantees there. And then the other thing that we wanted to share with you guys is, as you can imagine right now, in times of the coronavirus and people being very fearful of what is happening and whether or not they are at risk, is our New York Life website and our agents and people in the business are seeing a huge uptick in interest in life insurance. We are primarily or number one, first and foremost, a life insurance company. So because of the stay-at-home orders and all of the different precautions that are put into place, it can make going through the underwriting process to obtain a life insurance policy a little bit more tricky. So I wanted to share with you some of the things that New York Life has put into place to try to make it easier for our clients or people that are out there that are really now taking note and thinking that it would be a good time and be valuable to purchase a life insurance product. Wanted to share with you some of the ways that we're trying to make that more accessible, easier and simpler for those that want it. We've had in the past a program called Life Insurance Fast Track that was basically a limited underwriting product. So no blood draw, no urinalysis, really no physical medical exam, just answering some questions. And it was basically something that was available to a certain age set, so from 18 to 39 and up to people that were presented fairly healthy or pretty healthy, and only up to $500,000 worth of coverage. Well, in order to accommodate the need and the interest that is out there, for the time being, temporarily, for applicants up to age 50 and up to $1 million of term insurance, we can try to get you underwritten without that medical exam. And that's huge. That's double the amount of coverage. It's raising our limits that we had up to age 39, bringing that up to age 50. Now, for whole life insurance, that age limit has been changed to applicants up to age 70 and up to $3 million in coverage for a whole life product. So, that's a huge increase, and what a benefit. And it just, makes those of us that work for this company and know the heart and the soul of New York Life and how much we care about our communities and our clients. It just reaffirms to us that we always do the right thing and are trying to make it as easy as possible for those that are seeking coverage and that deserve to have coverage, can get it in the easiest way without putting themselves at risk by having to go out and get a medical exam or have someone come into their home and get a medical exam. We want to try to make that process as easy as we can for you guys. So if you have, had that inkling, or if you know someone that is thinking, what, I wish, not knowing what's going on, I wish that I would have taken that step, please reach out to us. We want to be able to help and offer that peace of mind that we can protect families and legacies and businesses and whatnot by hopefully getting some coverage in place for those that are really looking to do that right now.
Yeah, thanks, Lynette. And the other big opportunity this creates for people is, there's so many Americans who rely on their employer for life insurance, and with the layoffs happening, then they find themselves without any life insurance because those benefits from the employer, they're not portable. You don't get to take them with you. So this is a great opportunity for people to pick up some life insurance as they're in between jobs during this time. So
Great.
Thank you.
And for the video and for the podcast, could you please give a contact information verbally? We'll also have it on the website so people can reach you guys.
Sure. You can give us a call, 303-910-3716. We'll connect you to a rep in your area, Again, it's 303-910-3716. The website is newyorklifecolorado.com. And yeah, just give us a call, look us up.
Awesome. Well, you have been listening to Sister Strong, a podcast and video series all about possible. We've had the wonderful team from New York Life on today, and so much information to unpack to help you wherever you are, with high customer service, easy to apply, get whatever you need. And this is the team that's going to help you. So thank you so much for being on the podcast today.